Pleasure having you with us here on CNBC TV18. I think we have Rupen Rajguru now joining us from Bank Julius Baer. Rupen, great to have you with us here. Good afternoon. Appreciate your time. Talking to you on a day on a Tuesday. If you were talking yesterday, the mood was very different. I'm not sure if it's all okay, but I think people are a little shaken after what we saw yesterday. But the fact also is that the run-up was, in a way, in some pockets, unnerving, right? So just to start with that, do you think we had reached euphoric levels? Do you think in the near term there perhaps is there's a case for a little bit more of a cool-off, a pullback, some time correction along with some price pullback as well in the broader universe?
Yeah, hi. Good afternoon, Prashant. And yeah, thankfully I was not there on your channel yesterday. But nevertheless, so if we look at it dispassionately, right? Everybody was expecting some bit of correction. Everybody was not comfortable with the way some pockets of the markets were moving, right? Like moving up 30-40% in a month. So many stocks, and so not only stocks, but the themes, right, were moving up significantly. And such kind of shakeouts are important in the market because, definitely then the sanity comes in, right? Because ultimately when any segment gets big moves, a lot of retail investors do get sucked into that theme. So it's better that, reality check kicks in. So net, probably that segment of the market, which probably like say public sector enterprise or the small, mid and micro cap segment, there clearly we are seeing some bit of frothiness. And just to give you one ratio, the ratio of volumes of NSE 500 to the Nifty is probably at its all-time high. What does that indicate? A lot of action is happening beyond the top 50 stocks. And that is where, one has to be careful. So to answer your question, while yes, when that correction happens, nobody likes it, but everybody wants a correction. And probably it would be a good thing even in the market if we see corrections like what we saw yesterday, because such kind of shakeout is required. And I think that shakeout happened in the segment which had gone up the maximum. And I think that was warranted.
By the way, I was just poring over the BHGL results, trying to figure out where this loss came from. And well, there are no exceptional items that one can see. It's not some one-off settlement of some wage arrears, nothing like that. It just seems to be higher expenses. I mean, their other expenses are high, finance cost is high, the cost of raw materials is higher than the same period last year. And all of this put together has led to this little hole in the, not little, slightly big hole, 160 crores in the bottom line. But for what it's worth, the loss is lower than the September quarter loss. Even in September, they were in losses. And that continues in December. Stock is recovering a bit from the lows. Rupen, hi, good afternoon. Now, weighing on this, right? This is typically tail enders are not the prettiest of numbers, and that has held true for a lot of PSU stocks, IRF, CSJVN, BHEL coming out with the loss right now. And this really spooked the market yesterday, though today a lot of the dips are getting bought in the very same stocks. How would you analyze this, and how would you approach this PSU universe, large PSU stocks?
Hi, afternoon, Surabhi. One of the key reason why PSU as a pack has got re-rated. If you recollect 3 years back, there was extreme undervaluation, right? A lot of these stocks were available at between 5 to 7 PE multiple. And then in last 3 years, they have got significantly re-rated. While earnings have not done that kind of acceleration, but the stock has gone up 3, 4, 5x, and some of these are now trading at 25, 30 multiple. What are the key reasons? Why have they gone up? One, the government balance sheet is extremely strong, and that helps them to do capex. That helps them in a way. A lot of these PSU get their order book from the government, right? It's B2G, and basis the order book, I think market has given a assumption that there will be complete smooth or seamless execution. And I think one of the example which you just cited, while execution is there, but whether it's execution is happening on a profitable way or not, that's a big question mark, right? So hence that reality check, like what we are witnessing, is important, right? Because you can't just keep on bidding up the stock basis the order book. And the second and the other important reason why these stocks have gone up is the overall system liquidity has been strong. I think the capital raise has been easy. And some of the stocks, not all, some of the stocks have extremely low amount of free float. And that's where a lot of speculative elements are there. And I think that one should clearly stay away from that segment. So I would say the way I would approach these things is that, from extreme undervaluation, first it went to parity, and now there is clearly overvaluation. So I would say on a case-to-case basis, we see that what kind of profitable growth these companies are displaying. If it's just order book without profitability, it doesn't make sense to be in those stocks.
No, but Rupen, the thing is, I think we're in some sort of a very different alternate market. For instance, Nigel has been always cautioning us about the low float PSU stocks. But Nigel, what say? This is a market where HDFC Bank misses the margin estimates by a few basis points. It gets thrown out. You have Hindalco saying, okay, capex is going to be higher. The stock is rogered. You have IRFC coming out with a weak performance. You have another PSU with the losses. The correction lasts for 1 day at max. That's the market we're in, right?
Indeed, there's no room for error, for some of these other companies like HDFC Bank as well as, Hindalco, as you mentioned. Rupen, let me ask you about this capital market intermediaries. MCX was under some pressure. You have NSE that came out with their numbers, and in fact, that looked quite impressive as well. And there have been themes that you liked in the past. So, quick comment out there. And also, on this travel and tourism, I'm going to get a nice interview with one of the leaders in this space that will play on the channel in the next 5 days or so. But what's your view on both these two spaces?
Hi, afternoon, Nigel. In fact, both these two are, I would call them a big emerging theme for the country. Because one thing, while we might all on a daily basis debate about the way the market is going, whether it's going up or down, or what theme is working, what is not working. One thing is for sure, the overall activity in the capital markets have gone up significantly. Today, we have close to, I think, 14 odd crores a demat account. We have close to 17 odd crores, or rather recently it was 18 odd crores of mutual fund folios, right? And these have gone up, multiplied significantly over the last few years. Secondly, the overall activity in the capital markets, be it the volumes on the cash side or be it the volumes on the futures and options side, have gone up significantly. So how do you capture these, right? So I would say themes like exchanges definitely is a brilliant theme, and I think they capture, because ultimately for every volume which anyone does it, there is a share which the exchange gets out of it. So while there is transactional income, while there are R&D companies or they are depository participants, so all these get a share of annuity as well as a transactional income, and I think that a lot of people are also focusing on share of annuity, and plus more and more avenues of income are coming through. There is like account aggregators, which is there. A lot of these companies are getting into that. Insurance demat, a lot of private sector companies are going to get into demat. So these are other opportunities there. A second leg of that is, I would say a lot of the companies which, like, be it brokerage companies, asset management companies, or even wealth management companies, all of them do get benefited by this entire, financialization of savings, or I would say massification of equities. So as a theme, how do we ride this theme? Because we all are positive on capital market. We all are doing a lot of activity in the capital market. I think this is a theme which clearly we believe for next 4 to 5 years will be a big theme from an Indian market perspective. And quickly on the second part of your question, which is on tourism, I think this current government and the current prime minister in particular is very clear that India is a country which has probably the beaches, it has mountains, it has deserts, every possible thing which a tourist can look into, it has it. But I think one thing which was lacking is the infrastructure, right? And I think that slowly and surely they are trying to fill in that gap. So we already know that Statue of Unity probably commands the highest ever tourist spot. Religious tourism is something which is a big market which probably has not explored clearly, and I think with the launch or now with the new temple in Ayodhya, we expect huge amount of tourism happening there, and I think the religious tourism will pick up significantly. So tourism is clearly a big theme, and the companies associated with tourism, be it on the hospitality side or be it airline companies or some of the other companies which are linked to tourism, definitely will have a very good business outlook for next 4 to 5 years at least.
So it's not just the hotels. You're open, you would even consider, say, a company like Interglobe Aviation. Even in the aviation space, you would be interested, and particularly on hotels. Would you go with a market leader like Indian Hotels, or there have been some new listings like Sami Hotels, which owns Marriott, or The Park recently got listed yesterday. How would you view Indian hotels versus some of the smaller ones?
So hi, Reema. So see, in any a theme which is emerging, it's always good to have the leader first, right? Because the biggest beneficiary, the pricing power, the brand will always be with the leader. So in fact, the incumbent leader here itself is increasing its capacity by 50% from 20,000 to almost going to 30,000 rooms. So it's important that that would be a core portfolio when you want to play the theme. And what happens that whenever that valuation of the leader goes higher or significantly higher, there is a lot of catching up happens with the second tier hotels. So some of the names which you mentioned, right, they are purely basis the way the differential it has between the leader and the kind of some of the quarterly earnings or the earnings outlook they give, the stock kind of does tend to give us opportunity out there. So I would say as a core, one should have the leader, but as a satellite, some of the other names, one has to be very actively tracking those names, and those would be something which might give a higher return in a short period of time, because the leader always is will be a slow mover, a steady mover, but some of the smaller names will have much more action depending on their quarterly earnings and the kind of commentary they give.
Rupen, thank you very much for joining in. We just want to talk a little bit about Paytm because that continues to trade under pressure. This is after the big downgrade from Macquarie. Earlier today, we chatted with Macquarie's banking analyst, Suresh Ganapathy. We also chatted with Axis Bank's MD and CEO, Amitabh Chaudhary, on his stake. Listen in and we'll be back after this short break.
Their ability to monetize the data comes into serious question, right? The feedback that we have got is that they are curtailing business. One lender, which is of course there in the public domain and which is there in the latest analyst conference calls, is also Aditya Birla Capital having cut down their exposure significantly to Paytm. So my point here is that if at all the lenders decide to go back on cutting down their exposures to Paytm, then clearly the business model is in question, because that's the biggest profitable business for them.
Let's say the merchants of Paytm were onboarded by us. We have to and we will insist on doing individual KYC. Now that cannot be done, for example, by February 28th. So it does need time. So when I say we need permission from RBI, we need permission from RBI in terms of saying that yes, this is the roadmap you can take. We are okay with that roadmap. We are okay with the time you might need here. And we will be watching you very, very closely. But we do need RBI to bless it, because we cannot, just suddenly take over all the merchants and say, by the way, I'll take 12 months to do KYC. I mean, we cannot take that problem on our, on ourselves unless RBI gives us some kind of dispensation. I'm sure Paytm is in discussion with RBI. And depending on what view RBI takes on what has to happen, up to February 28th and beyond, we are happy to work with Paytm. They're a large fintech player. They have a large number of customers.